Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at, as per the title of this video, the Bitcoin USA election special and why this may well be the greatest buying opportunity going forward. And the question is, will you miss it? So what I'm going to do with this USA election special is to look at the Bitcoin price on the day of the election and what happened afterwards in all of the previous 3 cycles, so we can deduce what may possibly happen going forward. And as per usual, we'll have a look at the background, exactly what's going on in the news, as well as the wider markets, and also the 60-day cycle for Bitcoin to make head or tail of what's coming up in the coming days and weeks. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to go straight into the meat of the video. The theme of the video is really covering, with the USA elections taking place tomorrow, it seems very relevant, important and timely to do a video on what's happened with the Bitcoin price on the day of the previous 3 elections to give us some sort of an idea what may possibly happen, and then you can make up your own mind to see whether this is the greatest opportunity going forward. So you'll see on my default chart here, there's some extra lines, and those extra lines are where Bitcoin was on the day of the previous election. So let's have a look cycle by cycle as we normally do to make head or tail and elicit information which may be very useful and helpful for all of us going forward. So this is the first cycle here. The red line is the halving and the white line is the week of the election back in 2012. That was on the 5th of November 2012. And the green line on the chart is the closing price on that week. And if we zoom in a little bit, you'll see that that candle on the week of the elections back in 2012 marked virtually the bottom of the market, and it was the start of the parabolic move to the upside. But you can see that with the following candle, we did actually wick down below the green line. So don't expect prices to just go up from here. So you got one weekly wick below the green line, but on the whole, the week of the election marked the bottom and the start of the parabolic move. And this is where it ended up a year later. And if we move to the second cycle, again, the red line is the halving. The white line is the week of the election that was there. And on this occasion, there was no wicks below that price. So on the week of that close, there were no wicks below that price. So that actually marked the bottom of the market and the beginning of the parabolic move to the top of the bull market at the end of 2017. And if we move on to the third cycle, where the market topped out in November 2021, this is the election week here. And you can see with the green line, close of the day on the election day, the price moved a little bit lower. So we wicked down there, but that candle there, the weekly candle, was the lowest until we got the parabolic move to the upside. So once again, the week of the election proved to be the bottom before the parabolic move. And everybody can make up their own mind whether this is the greatest opportunity going forward from where we are to the end of the bull market. And moving on to the current cycle, we've just closed a weekly candle here with a shooting star. This is a bearish candle, so you may well get a little bit of a move this week to the downside. So we may well have another election week where we might just wick down, but based on the historical perspective that I've just shown you, this may well be the last flush out before the expected parabolic move. Only time will tell how long that's going to be, whether we're going to get it or not, and we've only got the historical perspective to go by. At the end of the day, everybody has to make up their own mind whether they want to be fully invested at this point or they're waiting for a pullback to lower levels. And as I've mentioned many times before, I've been fully invested since the end of 2022 when we marked the bottom of the bear market. And it's my intention to capture the whole of the rest of the move. Whether it comes or not, nobody really knows. I don't have a crystal ball, but based on the historical perspective, the record that we have over the last 14-15 years, our expectation is that we're going to get a big move to the upside, and everybody can make up their own mind. Okay, moving on to the news out there, we have certain analysts that are expecting the Bitcoin price to go as low as the 66,000. Whether we get it or not, we don't know, but this is what people are expecting, and that may well be the wick that goes down in the election week. And regarding the elections themselves, the people are expecting a 10% move in either direction depending on who wins the election. So let's see what happens, and it may well be that if they're disappointed with whoever gets in, we may get one quick flush out before a move back to the upside. That's what I would expect. And if we move on to the liquidation heat map, just to have a look at the range of the Bitcoin price we can expect over the coming days, what we have is really one particular zone here, a very strong yellow zone at this point here, so around about the 68,000, but we have some semi-yellow zones here at the top at around 70,000 and at the bottom here at 67. So it could well be that we're going to have a range between 67 and 70 in this week. And if we move on to the Bitcoin ETF overview, looking at the asset inflows and outflows, BlackRock here has been absolutely powering ahead with the inflows, and over the last 7 days, this seems to be increasing every week. This week, what we've had is nearly 30,000 Bitcoins into the BlackRock ETF. And before, we had the Grayscale that was bleeding a similar amount, but now you can see quite clearly that they've really downgraded in terms of their outflows. So overall, what we've got is green figures here. So the ETFs are really powering ahead, and sooner or later, we're going to be able to see that reflected in the Bitcoin price. And the question is, what is the dollar telling us? And what we know is that the markets have an inverse relationship with the dollar. So if the dollar is going up, the markets are coming down and vice versa. And this seems to be auguring well, because what we can see quite clearly with the dollar here is we're presenting ourselves with an evening star bearish pattern. So we've had a loss of momentum to the upside, then we've had an indecision candle with a small body in the middle, and now we're getting a red candle on the other side. This is what we call an evening star pattern, and you usually find these at the top of a trend, and with a higher degree of probability, we're talking about 70-75%, this is a reversal to the downside. So you'll probably notice over the last few weeks, if you've been watching my videos, that I put these two boxes here, this yellow box here and this yellow line. This was the 61.8 and the 78.6. So since we had this counter trend rally, this is where we expected this to top out, anywhere between the 61.8 and the 78.6, and we've come right in the middle of it. So the coming weeks, we can expect this to be coming back down, and we are creating the lower lows here as well as the lower highs. So the trajectory is to actually break below this over the coming months. And if we look inside the current weekly candle, what we find is another bearish pattern developing here. So we had this counter trend move, and as you can see, a very powerful move to the upside, but now that's rounding off. And this is what you call the reversal pattern taking place, because when you look at the candlestick patterns, they tell you all you need to know. And that is that the big move up here was followed by this bearish engulfing candle, the red one following the green one. So that's cancelled the previous green one out. That's followed by two indecision candles. One of them is the gravestone doji candle, which is much more powerful as a reversal than the indecision candle, of course. And currently today, we're getting a bearish engulfing candle one more time. So you really see an overwhelming bearish pattern developing on the candlesticks. So this is now setting the stage for the wider markets like the SPX, the Dow Jones and Bitcoin to move further ahead. And if we move on to the SPX, we're seeing quite clearly that we're coming to the end of the current 60-day cycle here with a move into the 60-day low in order to start the new cycle one more time. So you'll know that we've come to the top here. We've had three tops and then we broke out. So the natural place would be to come back and retest that in the current 60-day cycle low to start the new cycle there. So everything looking on time, but a big move to the upside coming up. And moving on to gold, what we've been seeing is a big, massive, powerful move over many months. This is a monthly chart. So we've had 8 out of the last 9 months with strong green candles. And currently we've got a little bit of a red candle here. And if we look inside this, it's giving us a clue where the gold is about to go. Because when you see so many candles here, we are due for some sort of a correction, some sort of a pullback to reset the structure so that it can go one more time for another last phase of the bull market. The question is, are we getting that? Well, the weekly chart and the daily chart gives us a very strong clue as to where the gold is going. So this is the weekly chart for gold, and you can see quite clearly we've got a bearish gravestone doji candle right at the top of this trend here, and that would mean, with all intents and purposes, with a higher degree of probability that you should get a run down to the downside. Now please remember, nothing is guaranteed. There are no certainties. These are high probability plays. We're talking about between 70 to 80%. So there's always a 20% chance that if the conditions are right, this will power ahead. Am I expecting this? No, I'm expecting this to play out because it's a probabilities play, and the probability is to the downside. And on the daily chart, this seems to be confirmed one more time, as we've had a big powerful move to the upside, and now we've got this overbearing engulfing candle, which is bearish to the right hand side of the small green candle here. So you can see quite clearly there's a loss of momentum, and we're now starting to move to the downside. How far it will go, nobody really knows, but if you have a look at the previous resistance and support, this is where I would expect this to come back to at least. If not, if we have a deeper correction, to come back to these levels here. So basically we're talking about the upper 2600s to the lower 2600s. And moving on to silver, silver was just about in the last couple of months starting to get going. And so what we've got is two very strong monthly candles here breaking the previous highs, and we made the new highs here now. So the question is, will silver continue to go up while we're expecting gold to come down? Once again, if we have a look at the weekly time frame, it gives us an insight into what's coming up for silver. And what we've got here is our old friend, the evening star pattern. It's a bearish pattern at the top of a trend where you get a green candle on the left hand side, a small body in the middle, and then a red candle on the other side. So this is what we call an evening star pattern. And once again, the probability of that is to play to the downside. So this would be a natural place for it to come and retest before we start moving to the upside. And if we look on the daily chart, it seems to be able to confirm what we're seeing on the weekly chart. And there you have it. You've got the extended evening star pattern here, where you've got a bearish engulfing candle on the right here at the top of the trend. So you have a loss of momentum. And then you've got three indecision candles here. Whenever you see more than one indecision candle, each subsequent indecision candle increases the probability of this happening. So these were telling you with a strong probability that this is going to come back down. So the question is, what is the Bitcoin 60-day cycle telling us? Now we have a bit of a mixed picture with Bitcoin on the daily chart as well as the weekly chart. So this is the 60-day cycle, and we are currently from the beginning of the cycle on day 63, back on the 6th of September. We are now on day 59 today, as you can see here. So we're coming to the end of the cycle, and as we would expect, when we get into the mid-cycle as well as the end of the cycles, we always get a rundown to end that cycle to start a new one. And this is exactly what's happening here. We've topped out at the 73. There was obviously a possibility that this would do that. But as we've been saying, that as long as we can consolidate around here, then the new cycle will set itself up to break the 73,000. So this is what we're expecting now, because we have consolidated in the upper 60s, which is giving us a very strong probability for a move to break the previous 73,000. The conflicting signals on the daily and the weekly are these. So if we have a close look at this, I'll show you where the conflicts are. First of all, we've had bearish divergence here, with the price making a higher high and the RSI making a lower high. And as you can see with the bear sign, that we're expecting a bearish move to the downside here. And that's exactly what we've got. But last night, what we were getting was this hammer candle here. Now, a hammer candle at the bottom of a trend like this has a high degree of probability to move to the upside. So this is really a rejection of lower prices. This is what this wick is telling us. That doesn't mean that the current candle can't go down. It's entirely possible to retest the bottom of that at 67,459. So we could quite easily go and double bottom there. It's unlikely to break that. But of course, tomorrow, depending on the result of the elections, if the market's not happy with the outcome, then we could get a flash crash all the way down to these levels here at around 64,000. So we need to be always aware and be open, fluid and flexible. Never get rigid or stubborn in your analysis here. But having said that, the daily close last night was a bullish reversal candle here, which is the hammer candle. But on the weekly chart, we can see that we have a gravestone doji candle or a shooting star, whatever you want to call it. The main character is that we've got rejected at the higher prices here. So there's a rejection of higher prices, and we are at the top of a trend here. So with a higher degree of probability, this is going to play to the downside. Now, how far it goes, nobody really knows. But please remember, this is a 70 to 75% play, which means that there is a 25% chance that this candle is going to be ignored and we can go to the upside. So we've got to always be aware on both sides here. And we do have other factors like the election going on. So those will affect the price no matter what. And if the election outcome is very favorable to the investors, then we could quite easily get a big move to the upside without the candle playing to the downside. So that's the conflict here. The daily candle is bullish. the weekly candle is bearish. So that's the current picture with the wider markets, with Bitcoin and all the news that's out there. We just have to wait for the outcome of the elections tomorrow and how the Bitcoin price responds to that. And for those of you who are interested in the private Bitcoin miners section that we run here at Wisdom Bites, this is the current state of play here. And for the benefit of those who are new to the channel, this is our current Bitcoin miners portfolio that we started at the end of the bear market at the end of 2022. So this portfolio started on the 6th of January in 2023 with around $100,000, and by the end of that year that went up to $434,000 with these Bitcoin miners here. And with that money of $434,000, we're currently running the trading portfolio from the beginning of 2024. So we've been going now for 10 months, and with this trading portfolio, what we do is we actually run the ratio trades. This is a unique method of trading that you won't find anywhere on the internet, apart from the foreign exchange where they do pairs trading. So this is a very similar idea to pairs trading. And this portfolio currently is showing a 22% increase from the beginning of 2024. So it's now gone up from 434,000 to last week's 530,000. This is our target. So if you want to follow our portfolio with the Bitcoin miners, this is where we're up to at the moment. We're expecting a 10x for the Bitcoin miners to 5 million by the end of the bull market. And if we achieve that, that would be a 45x from the beginning of the portfolio back in January 2023. So you may be asking, what are these ratio trades? What I can show you is the outcome of those ratio trades and how successful they are in terms of building up an incredible portfolio. And these are all the profit and losses of all the ratio trades that we've done since the 24th of January. And the last one we completed was the 24th of October, which was last week. So this was a percentage increase that we got on the last trade. But you can see quite clearly with the profit and loss, all the blue figures here are the profits that we've had over the last 10 months in all these ratio trades. And this is one of the safest methods of trading without taking the normal risks that you would do with swing trading. And it's all about nibbling away at profits like 13%, 14%, 28%, 14%, etc. So it's not going to give you the hundreds of percents that you would get with leverage trading. And if that's of interest to you, then below any of my videos, you'll find there's a join button here and also a join button in the description box. If you click on that, you can join the private members Bitcoin miners section here for the price of one coffee per week at £12.99 per month. You can join us there, and what we do is cover 2 videos per week on a Wednesday and Friday, anything and everything that's relevant to Bitcoin and the Bitcoin miners. And as you can see, we also do a market update every single day at the end of the closing day, and we also post all the charts, all the articles, anything and everything that's relevant to Bitcoin and Bitcoin miners. And if you want to know how the ratio trades work, below the current videos, you'll see that there is a new members introduction video which gives you an insight into exactly how simple and easy the ratio trades are and all the things that we do in the private members section. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.